Hey folks, welcome back to this daily recap for trading. Make sure that you have closed the stream and watch this stream later. This is just gonna be the daily recap, the way this market has worked from the beginning until the. I'm requesting you guys, please watch this video from the beginning to until the end. It's not gonna be a huge stream, maybe 30 minutes, maybe maximum 40 minutes. But please make sure that you have watched this video or this live streaming after you are done your trading. That means if you are not still trading, I was waiting for 3:30, that I can make sure that none of you are actually interested to go for any kind of trade right now. So that's why I waited for near about 3:30. Please make sure, it's very important, and you are not watching the video or live streaming and trading by yourself. Please don't do that. My request. If you're trading right now, come back again and don't miss this opportunity, the greatest opportunity to learn about this price action, dealing range, PDRS, bias, everything. Please don't forget, watch it with very much concentration. This is the weekly chart so far, and you will be able to see that this high has cleared all other highs on its left. So whatever left the highs was in this market, it has cleared all of the highs. This is the high of a dealing range. That means the high of the dealing range after clearing all of the highs. And if you look at this low didn't clear all of these lows, all of these lows, all of these lows. It's not possible for the market or for us to look for all of the highs has been cleared. But at the same time, it has cleared a swing low over here, around here. This swing low has cleared over here by that simple candle, okay, over here. It has cleared that low. So this high has cleared highs, this low has cleared low or lows. All of this has been cleared. So this is the dealing range high and this is the dealing range low. All of this price action you are watching right now are inside this zone, high and this low. This is inside that zone. When this market has fallen over here, did it trade anything over here, which is important to me? First of all, I can clearly see that it has traded that beautiful bullish fair value gap over here that has been, traded by that weak. We did damage a bit, but here that fair value gap is still holding the market. Here, that is that gap. Bodies are respecting this gap. So this weekly bullish gap market is holding it, and then this market started to go higher after clearing that low. When this market is going higher, where did it came very higher over here, traded that water block. Instead, I'm not interested to mark it as an water block. The reason is it has a big wick over here, so I'm not interested to mark it prematurely as my water block. But as a hindsight, I can see that it has traded that water block over here, highest up close body close candle. As an hindsight, it has traded that, so it came here, take that low, trade that fair value gap, then it went higher, trade that order block, and right now this market is over here. Remember, I'm going to break this candle, so I don't know what happened with this candle. I still don't know what is happening with that candle. The market is over here, so I would love to see what the market is exactly right now in between these two dealing range. I'll mark the high and the low. You can see this is the equilibrium. Just let me think, like this candle already not over there. I don't know where is that candle, what is happening to this candle, I don't know that. Okay, I'm going to remove this line because you have seen it has cleared that low, and going to remove that line which cleared that highs, or all other swing highs has been cleared over here. In that dealing range, this market came to this equilibrium. So here high, low, market went higher, come here, fall again, trade the 50% in this dealing range. This is the 50% area. If I were bearish, for example, I'm expecting this market will keep falling to take that low over here. I would love to see that it will come to this area one more time, which is the lower quadrant or extremely discounted area. If I am bullish, I would love to see that it will work with the equilibrium, or it can fall a bit more lower of that equilibrium, but it will never come over here to this line. It should not come over here to this line. I don't have any other bullish period over here. For example, like kind of 50%, or sorry, what to say? I mean the fair value gap or something. Nothing over here. I can't use this one as my order block as well, because it is lower than this candle. So this candle has closed below that candle. Until this low was not taken, I could use it as an order block, which you have seen here. Reaction happened from that order block, but when this candle took that low, I know that it didn't close below this one, so still it is valid order block. But still, I would love to skip the order block part over here. Instead of that, I would love to stay with the dealing range, the levels. So it went until the upper quadrant level, then come back again, tap to the 50% of this dealing range. Now when it tapped to this dealing range 50%, I am more interested to look for that high, not that low. I will start to look for that low to be taken if this market come here to this lower quadrant. Now for the first time when it is falling and it will come here around this area, I have no problem to think about a sell if there is a something from my lower time frame, some kind of sell side liquidity. Otherwise, I will keep looking for the buying opportunities. So from here, remember what happened to this candle. I don't know that what happened over here. I don't know that. All I'm seeing, Friday market trade this area. Now it is going higher. For that buy side liquidity, I'm expecting like that way. Now this is the weekly candle. This is the 50% of that weekly range, and I'm going to make it kind of. How can I do that? I would love to make it fade, little fade. Think I'm not able to do that, so I'll keep a line over here, just here, to show you the and removing all of this thing. Just remember, this is the line where I'm expecting this market is going to reverse from there for that buy side liquidity, just from that line, from my weekly time frame. Okay, I'm just going to fade it a bit so that you can understand. This fade line is from the weekly dealing range 50%. I am bullish. I would love to see it will work with this 50% area, and then it will start to go higher. That is my expectation so far from that area. Now I'm coming to daily chart. So from the high, this is the highest high, which is the dealing range high, the dealing range low that has cleared that low. Now on this chart, all of this price action is inside that leg, the leg or the dealing range, whatever you say. This whole price action is inside this leg. As we are going to trade through 1 minute chart, I have to break every leg. So from weekly chart, I'm expecting this market is going to reverse from that 50% of that area. Okay, it is going to reverse from there, from here. Now I would love to remove this candle because that is today's candle. So this is Friday's candle. So market come here, trade the 50% of that area. I'm seeing here a gap around this area. Now this gap is not important to me right now. It's not important to me. The reason is I'm just going to mark it as my daily bullish fair value gap over here. Daily bullish fair value gap. This gap is not important to me yet. This market can simply reverse from here because I have this bullish fair value gap, which is market right now trading, and it has cleared that low. See, this low has been cleared over here, so I don't need to worry about this gap yet. This market can start to go higher. I can look for the buy right now for this buy side liquidity, all of this buy side liquidity. So I'm going to mark another line over here, show you the buy side liquidity. Okay, so from the your lower time frame, from 15 minute or every time frame, you will be able to see that it has built a beautiful buy side liquidity over here. That is the buy side liquidity. From weekly chart, I have seen this market is bullish because it is above the 50% of that dealing range. Above the 50%, I'm expecting it will go higher for that high. From the daily chart, I have found a resistance zone over there. It's a very interesting resistance zone over there. So I'm expecting this market will go higher, and it will take at least this buy side liquidity even if it failed to clear that high. I'm not bearish. I don't care about this gap. It can fall for this gap. I don't care about that. Now in that area, you will be able to see that this is a low that has cleared that low. This is a new dealing range low from the daily chart. When this market went higher, it has cleared this high over here, that high over there, also this swing high over here. All of this highs has been cleared over here. Build a liquidity. After clearing some swing high, it has built a new dealing range from the daily chart. So all of this price action inside the weekly dealing range. Now this candle, remember we are going to trade the 1 minute chart, so we have to break all the leg. This whole price action is inside that new dealing range. So I'm going to come this dealing range, I'm going to bring it here, which is a new high from the daily chart. So I have a new dealing range. This is the high of the dealing range, the low of the dealing range. Going to mark the low and the high that has cleared the highs, swing highs. You can mark this high, but I'm interested to mark that high because it's not a swing high. So though I have marked it as a buy side liquidity, but it's not a swing high. From your lower time frame, you will be able to see there is a swing high, but from your higher time frame, this is the swing high, not that one. So I'm not going to mark that line. Instead of going to mark that high, just cleared that swing high. In this zone over here, how far this market can fall? You are looking for bullishness. Just remember that. You are looking for bullishness from the weekly chart. From the daily chart, you have seen there is a buy side liquidity, beautiful buy side liquidity. You are expecting this market will go higher. This is the quadrant level all of the premium and discount. Where is this market right now? In the deep premium. Can it go from here? Of course, it can go from there because I have a deep premium fair value gap. There is nothing wrong if this market starts to reverse from here and go for that buy side liquidity at least, and finally for the old weak daily range high. I have no problem with that. But if it started to fall, how far it can maximum fall? Until the 50% of the daily dealing range. This is the 50% where it can fall. So from the weekly chart, sorry, daily chart, you will see there is a candle body that has closed below this line. But from the weekly chart, you will be able to see that there is a wick, just a wick. Body has closed above this line, and there will be a wick that came until here because 5 daily candle is equal 1 weekly candle. So 3 or like next 4 candle will work here, 4 daily candle, and the fifth number candle will close above this line. You will be able to see that from the weekly chart there is just a wick, nothing, nobody, nothing over there. So from weekly chart, I'm expecting it is going to reverse from here. From the daily chart, I'm seeing that, wow, this is a very new daily range. I have this last fair value gap to that specific leg. This is the last fair value gap. Below this last fair value gap, this is the equilibrium area, as well as this order block from the daily chart, which has cleared the liquidity, traded a weekly bullish fair value gap over here, weekly bullish fair value gap from high the open. This whole range is a order block. Most sensitive line is the opening of this order block. So how far this market can fall? Maximum the open or the dealing range 50%. That is the maximum line this market can fall. If I am bullish from the weekly chart and I'm expecting this market will start to go higher from here, any kind of buying opportunity, I'll get it from here, I'll take that buy. If I see this market is falling, either I will let this go because I don't know exactly how long it will fall. Is it falling for this gap? Is it falling for here? Or is it falling for that opening of this order block? Or it will just fall a bit and then it will reverse and go for that buy side liquidity. As I don't know them, I'm not going to take the sell. If I would love to frame the sell, I have to understand that that's a low probability sell because the probability, high probability is to take the buy. Are you getting the point, guys? I need to ask you this question in between while I'm explaining this because I need some reply from you that are you getting the point or is it making some complication? I wanted to make it members only live, but I thought that this one I should keep it public because there then nobody will have any uh, kind of objection. Brother, I'm not getting the point. So I'm breaking it step by step. Is that understandable for you or not? Until now, whatever I told. Is it understandable for you or not? I need the reply from you. If you don't give me the reply, I'm not gonna continue this. Please give me the reply. I have enough time. I have to call to my mother after 50 minutes, so I have enough time to keep waiting for your reply. And please focus. Please focus. Okay, thank you so much. So now I'm going from the for the 4 hour chart. Okay, so coming for the 4 hour chart. Now this line, which is the 50% of the daily range, 50%, I'm going to mark another line over here, and I'm going to remove this area from my chart, going to change the color for blue. Okay, so it's a bit like not kind of very clean, but remember this one is weekly, this one is daily. So for 250% area from my higher time frame, highest time frame, weekly and daily chart. So right now this market is come here around this area, but look carefully what happened exactly over here. This is the high, that is the high that has cleared that high over here. This high has been cleared over here by that high. Then this market fall and went higher, cleared those highs, relatively equal highs from 4-hour chart, has been cleared. Then market fall, cleared the sell side liquidity, then started to go higher, failed to clear that high. Instead of that, it keep falling. It came, I think it's still it is the Monday price action. Why it is coming from the Monday price action? I don't want the Monday price action. However, it came here and closed over there. I'm expecting this market will go higher. I know that it can maximum fall until this line, it can maximum fall until that line, or maybe to this bullish fair value gap, but eventually it will start to go higher for that buy side liquidity. But from 4-hour chart, I have a new dealing range from this high, that low. Why it is important? Again, I'm going to trade to 1 minute chart. All of this price action doesn't have any value to me. I don't need to think about them. All I need to think about, price action is going to happen next, which is inside that leg, right? This is the leg. What I'm going to do, this is a new dealing range high over here, which left the buy side liquidity relatively equal highs, and it fall, came very near to this low and build another sell side liquidity. So it didn't clear that sell side liquidity, or maybe it has cleared it by shallow run. Let me clear it, just a tick. But however, it has built a new sell side liquidity or a support zone over there. This high is a dealing range high, dealing range low, going to mark the high over here and the low over here. Okay, now I am what I am, bullish. From where? From here. What do I see? That clean lows over there. What do I know? That this market can maximum fall until here, and there is a very beautiful fair value gap over here, which is very important because that is the daily last fair value gap. Daily last fair value gap, remember, this market can start from reversal from here. It can start to reverse from here. I would love to catch that buy, but I know that this market can start to fall now. Without going higher, it can start to fall now to clear that clean lows, trade this area, or maybe maximum until here. So whenever it will fall, I can catch the run for this sell side liquidity if I see some kind of liquidity has been cleared over here. Some kind of liquidity. That means market will go higher and then it will clear that high. Maximum it can reach until the equilibrium of the new dealing range, and then it will fall. Think like it didn't leave this sell side liquidity over here. Instead of that, it fall, cleared that low, trade this bullish fair value gap. It has already done over here. I don't need to think about this. This is going to happen. I don't need to think about that. It's a low probable sell. I am bullish. Remember, from the weekly chart, daily chart, for everywhere, I'm bullish. But 4-hour chart is telling me that I left some sell side liquidity over here. So if you see this sell side liquidity and didn't trade this gap over here, I didn't trade that gap, even though I have cleared these lows, but there is a possibility I will fall on more time to clear this sell side liquidity before going higher. Now if I keep that in my mind, that is going to happen, I don't know that. I'm going to keep that in my mind. If it would love to happen, this market can maximum come until this 50%, or maybe a bit above on this 50%, will never come to this fair value gap over here from the 4-hour chart. This gap plus this volume imbalance over here, it should never come over here because this is the deep premium. If it come here, means it is going to clear that buy side liquidity. I don't care about that sell side liquidity anymore. I would love to go for that buy side liquidity over here, and then maybe another PTR will be traded, then market will fall for this sell side liquidity. It will happen like that way. But if this market is interested for that fall, I have to wait this market to go higher to clear some buy side liquidity, and then maximum it can trade over here, or it will work with this 50, I mean gap 50%. It will fall, clear that sell side liquidity, it will clear this side liquidity over here, and it will trade either this daily bullish fair value gap or until here around this area, then it will start to go higher. So two things in my mind right now. Until daily chart, I was extremely bullish. I had no intention to look for sell. I had no intention to go for anything else. I was only interested to look for buy. But now when I came to the 4 hour chart, now I have a different case of scenario. It can fall first, then go higher. Or maybe without going higher, it will clear this sell side liquidity, trade this, then it will start to go higher for forever. Or maybe it will go here without clearing the liquidity. It will take the sell side liquidity and then it will start to go higher. All of these things can happen. So any kind of buy is high probability if this sell side liquidity is taken. All you are going to do, you are going to let this run go. This leg, you are going to let it go. You are not going to touch this leg. So market is going higher, you are not doing anything over here because you know it left that sell side liquidity. You need the confirmation. What kind of confirmation? Is it extreme bullish? You will wait this candle to come here to this deep premium area. Then it will retrace. Wherever it will retrace, you will take the buy from here to go for that buy side liquidity. You will wait for this case of scenario, or you will wait for this candle come here and maybe it will clear the buy side liquidity, or maybe you look for the SMT, whatever it is, then it will fall, clear that sell side liquidity over here and trade this area. So this is now two type of scenario. Both of this scenario, you will let go the run here, that run. You are going to let this run go. You are not going to touch this run. Okay. Now I would love to go to the 15-minute chart. By the way, before going to this 15-minute chart, I'm going to mark another line around here, this area. This is the 50% of that 4 hour chart, 4 hour dealing range. Sorry, 4 hour dealing range. Remember, brother, do I need to do everything? If you can do that, all of the things I'm doing every single day, you will get like a clear idea what is going to happen next, what how this market is going to work next. Everything is going to be clear to you. When something is happening, you are bearish but you are seeing the market is going higher, you will never get I mean, you will never be confused. Oh man, it is going higher, so it is going to fall, or is it going to keep going higher? Because you know that how long you have to wait, how long the run you will let go, and when you are going to enter over here. I'd love to go for the scenario and the way you will start to think the market before it happened. Okay. At the same time, I clearly told that if it didn't leave that sell side liquidity over here, instead of that maybe trade here, I don't need to think about the two type of situation. In that type of scenario, I'm extremely bullish. I don't care this market is falling or not. I will keep looking for the buying opportunity for the buy side liquidity. It will be one sided. Now it is the both sided, not one sided. It's both sided. Now from the 4 hour chart, I'm going directly to a 15-minute chart because 1 hour chart and 15-minute chart are almost same. Now I'm in 15-minute chart. Okay. So 15-minute chart. Remember, this is the 4 hour high, 4 hour or the daily, whatever you say. The dealing range high was there from the 4 hour chart or the daily chart, both of that area. This is the high, dealing range high. This is the dealing range low. Now from the 15-minute chart, what do you see? You will be able to see that this low has cleared all other lows. Even this low has been cleared over here by a shallow run. Okay, market is over here. So this is a new dealing range low. Previously, where was your dealing range low? Your dealing range low was here. Remember, from the 4 hour chart, daily chart, weekly chart, from everywhere. That was the dealing range low. But now your dealing range low is here. That is the leg you are watching. All the price is inside this leg. Now in this leg, this is the dealing range low. This is the high that has cleared a high over here. Over here, okay, that is a high that has been cleared. Now if you mark from that high to that low, you'll be able to see that this is the 50% over here. Around this is the 50% or the equilibrium over here. Above this high, this buy side liquidity is very near. Above this high, this buy side liquidity is very near, which has cleared this swing high. So I'm going to mark a new buy side liquidity over here, which is below this extreme buy side liquidity, a new buy side liquidity. Now, brother, this is also a buy side liquidity. If I saw this is also a buy side liquidity, clean highs, I don't need this buy side liquidity. That buy side liquidity is more than enough. Or maybe there is no buy side liquidity. Okay, same kind of scenario. What happened here? Guys, please focus over here. I'm begging to all of you, please focus whatever I'm saying to you, because this is extremely important. If you focus, I promise you, brother, a lot of things is gonna be clear to you. Please focus. It's a request. Don't think this is just a rant. See, this happened over here. If same thing happened over there, same thing happened over there, I didn't need to mark that highs for the dealing range. I could simply mark this dealing range. I'm explaining all kind of scenario, whatever scenario can happen. Okay, so this same thing happened over here. That is my dealing range, because this high has cleared that high, and all the price action is inside this leg over here. Or maybe it is the clean highs. Same thing like here. The same scenario you are seeing here, this is the same over here. If it would happen, this is also my dealing range. Not that highs, this highs over here, and this is my dealing range. Now, as it has cleared that high by the body close, it's not the relatively equal highs. It's not my buy side liquidity. This is just a swing high. A swing high, which is an intermediate term swing high. If this high is reversed, means market is bullish for the next buy side liquidity level. So if this high is taken, there is 90% possibility market is going to clear that buy side liquidity. Here, if it can break that last fair value gap over here from the 15-minute chart, this is the last fair value gap. If it is broken, that is going to be taken. So something like, if it is this high is taken, finally or eventually these highs are also going to be taken. So the dealing range, the whole price action is dealing in between this buy side liquidity and the sell side liquidity, or the lows that has cleared that low, as well as build a sell side liquidity over here. So for example, this low is a bit above of this low. Okay, it has cleared that low, but think like it is here somewhere. What I was going to do, I was going to mark that swing low to mark my dealing range. Of course not this low, because all of this price action is inside that leg over here. Until now, whatever I told you, do you guys got the point or not? Do you have any question or not? If you have any question, let me know. If you have any doubts, let me know. Otherwise, I'll keep going. Okay, but before that, make sure that you just give the reply to me, or you got everything clearly. I can see just 19 people over here. It's very good, because 19 people means a smaller people, a smaller group of people, and I will be able to give you the reply if you have any confusion. So please give me the reply before going further more. Please make it faster. How do you know that how this market is going to react from one level to another level? Yes, good. Okay, okay, thank you. At least some of you, I have one question. Can you please tell me that today we made new low? Are you calling it buy side, right? New low. You are calling it buy side. If it make new low, so why I will call it buy side? I will call it sell side if it create the sell side liquidity. I'll go over there, Phoenix. I'll just go over there. Just let me clear. I think until now everything is clear. So this new dealing range from 15-minute chart, remember from the 4-hour chart, what I'm waiting for. It can either come here to this deep premium area around here, then it will keep going higher for this buy side liquidity, or it will go for this sell side liquidity, trade this gap first, and it will go higher. But before it happened, it has to go higher, clear some buy side liquidity. Remember, clear some buy side liquidity. How long it can maximum go? Until this dashed line over here, that is the dashed line, the 50% of the 4-hour dealing range. So maximum, if this market would love to go, it can maximum come over here, and then it will fall, clear this sell side liquidity, then it will follow the bullish directional bias. It will follow like that way. So remember this line. Okay, now from the very higher time frame, what do I see over there? A bearish gap, and it is the last fair value gap. Now it's the last fair value gap below this high, not below this highs. Below this highs, I have the last fair value gap over here. Below that high, this is the last fair value gap. So it's not the last fair value gap I can use to take the buy. So sometimes I say that okay, so market has closed above this, now it should not close below this consonant crossment, and then it will go for the buy side liquidity. No, this is not that last fair value gap. The last fair value gap is gonna be very important if you see a relatively equal highs above this last fair value gap. In this small price action over here, this is the last fair value gap over here. See here, until it's not broken, this market can't take that buy side liquidity. This is the important last fair value gap over there. So I'm not interested to see this gap to be broken and to take the buy. It could be broken. This market can go a bit higher before falling. However, in this range, new dealing range over here, around here, new dealing range, market went higher. What I'm expecting, market is going to take the sell side liquidity. Of course, it can start to go higher. In that type of scenario, I will later, change my bias. I will go for the buy. But right now, I'm thinking two type of scenario. Either it will go higher until the 50% maximum, and then it will fall for the sell side liquidity, or it will clearly go higher, or it will clear that sell side liquidity, trade this, and start to go higher. Whatever this market will offer me, I'll catch that. All I'm going to do, I'm going to let this run go. If this market gave me this run, I'm going to let this run go, and then I will catch that run. If it provide me that run, I will catch that run. If I'm failed to catch that run, I will start to catch the buy run again. From here, I'll start to catch buy run. So either way, I'm not going to miss anything. All I'm going to do, this leg, I have to let this go. Just that leg, the first leg, I have to let this go, because it can be keep going higher, or it can simply come until here, trade any kind of bearish PDRA, and then keep falling to clear the sell side liquidity before going higher. So I will let this run go. This run is going to confirm that what is going to happen to this market. Now in 15-minute chart, I found that. What I'm going to do now, I'm waiting. So my job is done. The day is going to start. What I'm expecting, is it going to fall, clear that sell side liquidity, trade this gap, start to go higher? Is it going to happen? Three case of scenario. What is going to happen? Fall, clear the sell side liquidity, trade here, start to go higher. First case of scenario. Or it will go higher, clear that swing high, trade this maximum area, and then it will fall, clear that sell side liquidity. Second case of scenario. Third case of scenario, it will keep going higher, and it will come to this deep premium area, to that 15-minute range here, that is going to confirm that I'm bullish. So from the 4-hour chart, I know that it can maximum come until here, but from 15-minute chart, it is going to confirm that I am bullish. I'm not bearish anymore. So I don't need for 4-hour chart to confirm that it has closed above this 50%, or it is going higher. Nothing. From 15-minute chart, I can get the information. So this is the three type of scenario I will wait for right now. Okay, so let's say what happened. This market fall one more time, take that swing low, a very small swing low over here. What is going to happen? Do I know that? No, I don't know that. Is it going to stop the market and send it lower for this? I don't know that. Is it keep going higher to clear that swing high to trade this maximum area? I don't know that. So keep watching. Okay, so this market actually started to go higher. Now come here around this area. Where is this level? Look at this whole price action from 15-minute chart right now. This is a swing low over here. That low has cleared that low over here. See, let me actually mark it for you. From 15-minute chart, this is that low that has been cleared over here, around here. It's too small. This is the swing low that has been cleared over here, around here. I don't know that what is going to happen. This market is going higher, or is it going to fall? I don't know that. This leg over here has cleared that swing high over here, that swing high or those swing highs. It has cleared that liquidity over here, around here. Okay, that has been cleared. Trade the 15-minute last fair value gap over here. That is the 15-minute last fair value gap. If it closes above this gap, am I going to use this gap to take my buy for this high? No, of course not. It's not my buy sell liquidity. I'm not going to do that. It's not important for me because it's not relatively equal highs. If it was relatively equal highs, this gap could be very important to me. However, it has traded this gap. It has taken the liquidity, trade the quadrant level as well as all of the other PTRS build a new leg. Lowest down close body close candle is gonna be the order block that has traded this bullish fair value gap over here, because this low is still not taken. So this is the 50-minute last fair value gap over here for the bullish price action. Trade here. Lowest down close body close candle is my order block from high to the open. All of this area is an order block. I don't know that what the market will go. Is it going higher? Is it going to fall? I don't know that. All I know, if this market really would love to fall for this sell side liquidity, it's not going to go above the 50% of the 15-minute dealing range. If it go above the 50% of the 15-minute dealing range, this can maximum come until here. If it come here, I'm going to take the buy. I'm not bearish anymore. I will be bullish. I'll be only bullish. That's all information I have right now. I'm expecting this will go higher and then it will fall. Now it has built a new dealing range from 15-minute chart, because I'm now interested to go to 1-minute chart. Okay, so here this is the dealing range low, the dealing range high that has traded a gap, that has taken the liquidity. It's not important to take that trade that gap. It's not important, but it has traded, so I am showing it to you. Going to mark this low over here and this high, a new dealing range. At the same time, I'm interested to mark another line over here, which is the 15-minute old dealing range 50% over here. Going to make it the dashed line so that you can understand that 50% over here, the dashed line from the 15-minute old dealing range for the extreme liquidity. This is the extreme liquidity over here. This is the extreme liquidity over here around there. This is the extreme liquidities, extreme dealing range. I'm now working inside this small price action over here, where in this small price action around this 50% dealing range from 50-minute chart, I have another fair value gap. What is the best area for this market to reverse from this 50% area? If it is overzealous, how far it can maximum go until this fair value gap or maximum to this dashed line? It should not come here, which is the upper quadrant level of the dealing range. If it come here, market is going to take that buy side liquidity. So if I'm expecting this market will come here first or here first, I don't want to see this new dealing range. Market is going below the 50% of that new dealing range. Of course, it can go a bit below of that dealing range. There is nothing wrong for that, but it should not, I repeat, it should not come to this lower quadrant level if it is really interested to come here. If it fall here, I'm interested to look for that sell side liquidity. So I will start to look for the last fair value over here to frame the sell setup. Let's see how this happened. This fall, I'm not interested to touch it. I'm not going to touch this fall because I don't know how far it will fall. Is it going to fall for this extremely premium bullish fair value gap over here? This premium fair value gap or equilibrium plus order block, or is it going to go below this equilibrium to trade this inverse gap? I have no idea what is going to happen. I'm just predicting what is going to happen. If I'm right for the bullishness, it will not never come here. If this market is interested to catch that sell side liquidity, it will come here. So I will take my decision depending on the price action. So market fall to come here to this 50%. All of this price action, what did I say? The first leg, you are letting this go. You are not going to touch this first leg. That leg you are not going to touch. Either you will take that leg or that leg, because this leg is going to confirm where the market is going. Is it going for the buy side liquidity? Then it will come here. Or is it coming for the sell side liquidity? In that type of scenario, it will either any of this level will be traded. So this whole leg, I'm going to let this go. If this is interested to go for that area, what should it do? Maximum fall here, maximum, or maybe until this inverse gap, we will come here. Never ever trade here, or it will work with this bullish fair value gap. Important fair value gap. I don't know what is going to happen. I'm just predicting what can happen. What is it respecting so beautifully? Perfect. Order block, lowest down close body close candle. We'll go for that 1-minute chart. For the first time, when it came here, this area, which is a deep premium fair value gap, I'm expecting this market will keep going higher. It came here. Did it build any 22 YT model? Did it build any 22 YT model? Or Did it build any two bullish fair value gap? Two questions. First, this is that clean lows over here. Market came here, built the buy side liquidity over here. So you got this line, right? This gap. I can be wrong. This market can come here to this 50% to trade this inverse gap or the last fair value gap from 15-minute chart. I can be wrong, but this is my first opportunity to go for the buy. Either you will let this go. If you are not interested to let this go, then what you will do, you will see what happened here with a new dealing range. A new dealing range from your 1-minute chart. Where is the dealing range high? This is the dealing range high. Market fall, come here, take that high. New dealing range from here, low, low, low. Here to here. This is a new dealing range for you. Going to remove this 25% by leaving a 50% range over here, which is the 50% maximum this market can fall until this 50% if it wants to go higher for this fair value gap. Remember that if it wants to come over here, this market can maximum fall until this equilibrium. This is the deep premium fair value gap. New dealing range high and low. Market from here to here, new dealing range, right? So all of this price action I still don't know. Here, if I am interested to look for buy, it should come to this deep premium area. See this deep premium area? If it doesn't come here, it is more interested for this sell side liquidity. It will work where? Maximum until the equilibrium or maybe a bit above the equilibrium if there is a fair value gap. Are the pointer getting clear to you, right? Dealing range low, forget about all of this. Click the bar. So right now you are here, around here. What is going to happen right now? This swing high has cleared that high. Above this high, is there any relatively equal highs? No. So I can mark this one. If I saw there is a relatively equal highs, I would transfer this high from here to here because there was buy side liquidity. As I don't have any, I don't need to mark any. This low has cleared all of these lows, relatively equal lows or sell side liquidity has been cleared over here. I am expecting this market will go higher from this deep premium gap. If it wants to keep falling, it will work with this 50% area. If it doesn't want to keep falling, instead of that, it is interested to work with this premium gap, it will start to go higher. What happened? Market started to go higher. Am I going to take the buy? Of course not. Why? I know that it can maximum go until here, then it can start to fall again. So I'm not taking any buy. And then this market came here. What did it done over there? Relatively equal highs. So what is now my expectation? Is it going higher or is it going to fall? If it wanted to go higher, it would come over there. It didn't come over there. Instead of that, it has built relatively equal lows, new sell side liquidity over here. I'm just going to show you all the opportunities you can use from this market. If the candle can take some kind of buy activity, failed to trade this line, it's my selling opportunity for this new sell side liquidity inside this dealing range. Look what happened. It actually consolidated over there and finally it has cleared that high over here. Failed to take that high, instead take this high over here that has been cleared over here. Still 50% of that dealing range is market holding. There is no other dealing range, just this dealing range. I'm interested to see can this market take that sell side liquidity or not. I have already got the market to take the liquidity. I have now a new dealing range, low and the high that has cleared that high. So just remember, if it come here, it never come here. So I don't need this right now. I'm going to break it down for here. That has cleared the high here, failed to clear that high. So far, I don't know it will be cleared or not. If it is cleared, I'll mark that high. This is the low because there is no other low. This low didn't clear any swing low. This low is the target for me. This is the high so far. I'm interested to look for sell. If there is any setup, I'll go for that sell. Market went higher one more time. We'll take that high. So what I'm going to do, move it from here to here, new dealing range high because it has cleared that high. Fail to clear this one, leave the buy side liquidity for later. However, give me the market structure shift, fair value gap. I'm interested to take a sell from this fair value gap, which is around the equilibrium to new dealing range. If this market would love to fall, it has to come to this lower quadrant level. If it tap to this lower quadrant, it is going to be cleared for sure. So before giving me the entry, if it can tap to the lower quadrant, that is a highly confident trade. Will put my stop loss at least above the candle which has built this fair value gap or the market structure shift fair value gap. Going to target this sell side liquidity over here, very small sell side liquidity. Before taking the entry, I want to see it will tap over here. That is a highly confirmed entry. Or maybe I'll not take this trade because it is reacting with the 50% of the equilibrium to the new dealing range where there is a fair value gap over here. So maybe I'll not take this trade. Up to you. Move it, okay? Let's see what happened. Where did it came? Lower quadrant. If I get the entry, there is nothing that can stop me to take the sell for this sell side liquidity. If it doesn't give me the entry, I'll let this go. See how it has been cleared, that sell side liquidity over here. Where did it work? The whole price action, where did it work? First, it worked with the equilibrium. Remember, this is the equilibrium over here. Never ever reached to the deep premium area. Fall, new dealing range, came to the lower quadrant. If it wanted to go higher, it should not go below the equilibrium of that new dealing range. Do that, came here, just falling without giving me the entry opportunity. Acceptable, no problem. This dealing range is broken. Over here, that dealing range is now broken. For this dealing range, market has built a new dealing range over here. High. I'm not able to complete this actually by small thing or whatever it is. So over here, while you can see that this market has cleared this buy side liquidity over here. What it left? Relatively equal highs around there. Okay, that is a relatively equal high. So you have now a new buy side liquidity from this market. Clean buy side liquidity. It fall, cleared that sell side liquidity, relatively equal lows, and that low has been cleared. Trading the 15-minute bullish fair value gap. Here, look on your left around this area, your last fair value gap plus entry fair value gap. Just mark both of them all together. Extend it to your right. That has traded by the market over here. That is the last fair value gap plus entry fair value gap. If it come to the last fair value gap, I'll mark it only the last fair value gap. If it doesn't, it's okay. New dealing range. Okay, this high, that low. Now what I'm going to do, I'm going to move it from here to here because now the buy side liquidity is more important to me. Came here to this last fair value gap. If this market is interested to go for that buy side liquidity right now over here without falling for this 50% of the big range or the main range, remember it can maximum fall until this 50-minute 50%, 15-minute dealing range 50%, or below this 50% there is an inverse fair value gap from the 15-minute chart. If it doesn't want to come here, instead of that, if it would love to go from here by using this gap, this is the best case of scenario to take the buy while you have this buy side liquidity. You can take a losing trade. This market can keep falling after giving you the buying opportunity, but this is the greatest opportunity to look for the buy. So look what happened over here. Market went a bit higher, fall one more time, came here where I'm going to mark it just the last fair value gap plus the volume imbalance here. Going to keep it, extend it to my right, traded the 50%, only the last fair value gap, the best case of scenario. The first time it will start to go higher, this gap is gonna be important to me. That bullish gap is gonna be my reclaimed gap. Or if you have any 22 IT model, you are going to take that buy from there. Or there is any kind of inversion fair value gap, you can use that inversion fair value gap as well. Going to remove this low from here, new dealing range low. So went higher, fall here. Above this lower quadrant area, any kind of buy is a high probable buy until this upper quadrant area, which is this deep premium gap. So it can come here, then react, fall until the 50%, then take that buy side liquidity. Whatever it is going to provide me, we'll see that. Okay. So this market went a bit higher and finally it started to go higher after giving the market structure shift here to fair value gap. This is the last fair value gap. See here, first fair value gap. Inside here, this is the new fair value gap. So 1, 2 fair value gap. market structure shift, entry fair value gap, breakaway gap, inversion fair value gap over here. You have lot other things where this market should not come. The premium area, if it would love to go for that buy side liquidity, where should it trade? The deep premium area. If it wants to keep falling, what happened here? Remember that dealing range traded the 50% and then fall. Where did it came? Deep premium area. What does it mean? These areas are now your highest opportunity to take the buy. Any kind of buying opportunity you will get over here, you're going to take the buy. So here, first opportunity is from this 50%, which is the dealing range 50%, aligned with the second fair value gap, first fair value gap, second fair value gap. So this can be your first opportunity. Stop loss below the dealing range low. Target all-time high after clearing 1:1 partial. You can see here 14 handle to 1 tick, 14 handle 1 tick above this liquidity. If it is an immediate reaction to this gap, not that gap, it's not important to me. Last fair value gap reaction, it is also important. This last fair value gap is also important. Why? Because above this last fair value gap, you have the buy side liquidity. I'm just trying to show you all the factor. Okay. Then this market fall, trade this gap as well as the 50%, very specific area, trade that 50%, buy side liquidity is my interest. And this candle has closed above this gap. Brother, unfortunately, I was not believing you. I didn't take this 22 YT model or the first gap, second gap, entry from here. I missed all of this trade. What can I do? Bullshit. This is the last gap. How many times did I show this to you? I don't know that it is going to work or not, but I'm just trying to show you how you are going to predict this last gap. This is the last gap below this buy side liquidity. See, this last gap is very important to me. When this candle closed above this last gap, the very next candle tapped to this last gap, that's my buy over here. Without thinking twice, I'm going to put my stop loss below this candle. 1, 2, 3. This 3 candle has inversed, made this last gap as an inversed gap. Now you can see that this candle is a no wick candle. So what I'm going to do, I'll take a bit more risk below that low, because just it can come back again to finish the manipulation for that no wick candle. Still that is 10 handle, something like that. Here we'll go for 10 handle. Okay, 1:1, something like that. 1:1 will try to catch that run above this liquidity, relatively equal highs until this last fair value gap over here, around here, 50%. So let's see, that is going to be my entry. Because I missed the entry from here, so I'm going to catch this entry. My first intention to see, nobody is going to close below the 50% of this gap. Not every last gap, not this last gap. It doesn't have any value to me. But this gap is valuable to me because this gap is holding the market for this buy side liquidity. It can be the fake breakout. Market can fall. I'll get stopped out. We'll close above this gap. We'll take a re-entry again. Let's see what happened. I didn't like this candle close below the consonant crossment. Below the consonant crossment. For the first time, it will close above this candle. My stop loss will be below that candle. Whatever is going to happen, I don't care. I'll get stopped out. I don't care. But my stop loss will be moved to that area because market has closed below this area. Okay, so that's gonna be my stop loss, and we'll look for that target if it keep me that there. That is the boom. At least the partial, and then we'll hold the trade for if it keep going higher or whatever it is going to do, we'll go for that. Okay, so something like that. This is how you are going to react with the dealing range. Now I'm not able to show you all of the things because I started from here so that I could cover all the things, but it will take much more longer time. I have already told you that I'm just going to go for the 30 minutes maximum, but it's already more. Okay, so I'd love to finish it over here around this area. I'm just interested to finish this from here. uh this is that gap. Remember, just that 50% dealing range, 50% maximum it can go until here, which is the day 4-hour daily range 50%. It can maximum go until here, or the best area is to reverse from here from the 15-minute chart. This market is falling, 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 cleared all the sell side liquidity here. This, remember this clean sell side liquidity over here, this sell side liquidity here, not that one, sorry, my mistake. That sell side liquidity from this, the extreme sell side liquidity that has been cleared, market fall to this bullish gap over here. Okay, I'm going to not interested to show this to you because I was here in front of with all of you guys, so I covered until these lows. So I told that these lows until is not cleared, this market can't go higher to clear this buy side liquidity over here. This buy side liquidity can't be cleared if this market failed to clear this sell side liquidity. Okay, whenever it will clear this sell side liquidity, remember there is an unfinished business. I'm just going to finish this with that. Okay, the entry you have seen over here, there is an unfinished business over here, which is the inverse gap or the last gap, whatever you would love to mark it here. You can mark it, I don't have any problem, but I'm interested for this inverse gap over here. Okay, below this inverse gap, this is the lowest down close body close candle, which is the order block. I'm just going to mark the open of this order block just because the sake of the beauty of the chart. Okay, but remember, until the high, from high to the open is the order block. This is the order block high. I'm going to extend it to my right. I'm interested to mark the order block 50%. So here, this is the 50% of that order block. Now I'm going to mark that 50% here as well, which is the mean threshold of that same order block. Just going to mark it as an order block. Why and how you are going to think about this market. Okay, so when there was the sell side liquidity over here, look at this dealing range, how you are going to react with this dealing range. You have this sell side liquidity. Okay, this is the dealing range high. Where is your dealing range low? This leg. Okay, you are watching this leg. This is the low that has cleared all other lows. Yeah, it failed to take that low, build a new dealing range low plus the sell side liquidity. This is the dealing range high that has cleared all the other highs. Going to mark that high until that low or that lows, clean lows, because I have the sell side liquidity here. This is the equilibrium, how far this market can go higher if it wants to take that sell side liquidity. Maximum, a very random level, guys, a very, very, very random level. Maximum here is the maximum allowed position. Sometimes it can go a bit higher because there is a small gap over here. See this small gap over there? It can trade that small gap. But this market should not come to this area, which is the deep premium area. If it come here, it means this buy side liquidity, this high is going to clear, as well as these highs will be cleared over here. Market will keep going higher. Okay, so it's kind of falling until this sell side liquidity can maximum go until over here. So market come here and then lot of consolidation, take the buy side liquidity here. Relatively equal highs has been cleared by that high. So let me actually mark this. Clean highs has been cleared over here. Build a new buy side liquidity over there. Sorry, let me finish this. Okay, it will take just 5 minutes, more minutes. New buy side liquidity, relatively equal highs. After cleared that sell side liquidity, I have a new dealing range. What is the new dealing range? This high to that low. So I'm going to mark that new dealing range here to here, around here. Okay, if this market come to this dealing range here around this area, the upper quadrant level here, it is going to clear that buy side liquidity. So you can see that market never cleared that buy side liquidity, but it is the most important part over here. How you are going to know that it's not going to clear that buy side liquidity. This is the most important part. First, this market has done its job. So while it has cleared that sell side liquidity, trade here and then retrace, the job is done for today. Rest of the days, it will keep building the liquidity. It will keep taking the liquidity. I told that wait for this sell side liquidity to be taken first. If you can catch the sell, of course you can go for that. If you failed to catch that sell, don't worry about that. Let him trade this area, then go for the first opportunity to take the buy. Now let's go for the first opportunity to take the buy. How long? Until this last gap over here, which is the deep premium, was this gap can stop the market, send it lower, because this is the last gap above the last, buy side liquidity, sorry, below the buy side liquidity. Relatively equal highs, last fair value gap. it has the power to stop the market to send it lower again. If it was single high, not the relatively equal highs, I didn't give a shit to this market. I don't care about that gap over here. However, when it has cleared that sell side liquidity, trade that inverse gap. I'm not going to push the button. Why? It takes too long to come here. Too long, right? It built the liquidity, sorry, inverse gap here. I'm not going to believe it anymore. I am just going to watch it, how it is going to react from that area. So I have seen that, wow, it went through this inverse gap, trade the order block open, then finally closed below this min threshold. That is a sign I will be back. If it closed below this min threshold, that is a sign, but not now. First, let me go up first. After going higher, then I'll fall to clear you. That low, at least that low, or maybe this order block low. I'll be back to clear you. However, it fall closed above this inverse gap again. So you have seen that I have taken my trade first entry from here, from that candle. It closed. I don't give a shit to this gap. All I want to see, it will go at least until here, that 50%, even if it is bearish. Even if it is bearish, market will keep falling, keep falling. I don't care. All I know that it will go at least until this equilibrium. As I'm bullish, I know that it's coming for this upper quadrant level. So what I did, I took my first trade over here, entry over here. Where is my stop loss? Below this low. Below that new dealing range low over here. Took the entry over here, waited to form the order block. This is the order block that has formed over here. Closed above this area. Did it tap the 50%? No, it didn't tap it. See this 50%? It didn't tap to the equilibrium level. Fall again, trade the order block, added more. Fall again, trade this order block one more time, the min threshold, added more over there. First partial, where? Equilibrium, not exactly, but a bit below. This is the first partial. Second partial over here inside this candle, because it can simply trade that candle, which is a bearish order block, can keep falling. The last partial to the open of this last fair value gap, which is inside this, the deep discounted, deep premium area. Entry here, closing here. Now it's a very small trade, you can think like that way. So stop loss is gonna be 24 handle. That is gonna be the stop loss, and target is until here, around here, just the opening of this last fair value gap, 43 handle, after clearing 1:1 partial. So from here to here, 29 handle partial, or maybe a bit below of this 50%, 29 handle partial, random partial, finally closed the trade over there. It appeared on the chart. How did it appear? This dealing range is broken, because look at this low and that low. What do you see over here? New relatively equal lows. Market went higher, came to this last fair value gap, not interested to see it will come to the lower quadrant of that new range. That low has cleared all of this range, and the new range is over here. This is the high of the range that has cleared this swing high, that swing high, that swing high, that swing high. Every swing high has been cleared. So I'm more interested to see that new dealing range, if it wants to keep going higher. For that buy side liquidity, it should not go below the constant encroachment. It should never come to this deep, the discounted area. If it come to this deep discounted area, that means it is going to clear that low. If it cleared that low, for the first time, it will start to go higher again. I'll take the buy, and this time this buy side liquidity is going to be my target. So that specific leg, I will let this go to see that how it is going to react from this equilibrium, because now it is confirmed here. It is confirmed market is going to clear that buy side liquidity. That has been confirmed over here. So I need to wait for the order block entry. It's not the area where I will just push the button. I will wait for the order block just for the confirmation. I've seen that this market fall and came here. No more buy is valid until this low is not taken. That low has been taken over here. Here, this low is taken. New dealing range. This is the high of the new dealing range. This is the low of that new dealing range. What it has done? Cleared that sell side liquidity. If this market is interested for this buy side liquidity right now over here in that dealing range, it has to come to this upper quadrant level again. Over here, I have another last fair value gap over here. Going for this area, new area, around here, either go for the inverse gap. If I go for the inverse gap, it's gonna be very small inverse gap, but for the sake of this conversion, I'm going to show you the same thing again. Okay, here, here, or maybe this whole volume imbalance, extend it to your right, either this one, and you can see that this is the first time. Look, when it fall after long time, I'm not going to believe it. I'm not going to believe it. I'll let this go, and this low is expected market to be taken, closed here, that has closed above this inverse gap. Tap here, I'm already in the trade. Look at the reaction. Where the market go? For this buy side liquidity, but market didn't clear that buy side liquidity. You are not going to hold the trade until that area. You are going to close your trade over there. Last fair value gap. Previously, remember, it reversed from there. How do I know that it's not going to stop the market? Even though it has traded this area, I need the reaction, then would love to see the run toward that area. But it didn't do that. Come here, directly go for the to take that high over here. New buying opportunity. Forget about that. Reclaimed fair value gap over here. Closed, tap here, how far it can fall until that order block. Able to catch it, take it. Forget about that. Brother, I also didn't take it. I didn't know that it is going to happen like that way. How did I know that? No problem. Come here, clear that low, look for two fair value gap. One is here. Can you see it? Very small, but you can see it over here. One is here. Am I going to take the buy? Of course not. Second one is here. Can you see that? Here. I'm going to take the buy from here. Just going to take the buy from here, around here. That is going to be the buy, covering this gap, plus the candle has built that gap. This gap has been built by that candle. Market should not take that low for buy side liquidity, buy side liquidity. New dealing range. At least how long? Until the equilibrium here. So we'll be take a partial over here. Buy there. Stop loss here somewhere, just for the sake of this conversion. This is gonna be the stop loss. 19 handle. We'll go for a 20 handle partial around the equilibrium. We'll close the trade, either the opening of this last fair value gap or the 50% of this last fair value gap. Not going to hold it until here, remember. Closing it any of this area, logical level. Close it. Okay, 37 handle plus 20 handle partial. Am I profitable? By taking a risk of 19 handle. All I'm doing here, the same thing I did here, that was the exactly the same thing. But unfortunately, you see here, I got the stop out because I was not able to cover the new week opening gap low. There was the new week opening gap low, or all other things was over there. But that run was predicted. It is very predicted run. Market is going over there for some kind of reason. It is going over there. It is also predicted that it is going to fall. This is also predicted. What happened here? Remember, this high has cleared this buy side liquidity, then fall, cleared that sell side liquidity. Went higher, fall, take that low, cleared that highs. Then the market rest of the time, like consolidating, or if I keep breaking them, maybe you will be able to see a lot of other things, but I really don't want to continue this on. I really don't know how many of you are watching. But whatever I told you, did you guys get something from here or not? I just need a feedback before closing the stream. I'm already so late. I shouldn't stay here until 1 hour. But please let me know, and then I would love to close the stream. If you keep watching them, you need more monitors, I know that, but if you keep doing this, you'll see this market is absolutely predicted. Not sometimes you are not going to get the entry, sometimes you will take a loss because of your tight stop loss, not for your stop loss, tight stop loss. If you can put your stop loss to the most logical level, 80% of the time you're not going to get stopped out, but it's going to be huge stop loss. I don't like that shit, so I try to put it a tight stop loss, and then would love to go for that run here. So here I got stopped out because I was tight up there. Just because of that I got, otherwise that was a beautiful run. I knew that it can maximum trade until the 50% of this candle, or maybe until this inverse gap. So oh, forget about that. What did I tell you about this gap? Remember about this gap? If you are with me inside the morning session, go back and listen what did I told about this gap. Mark this gap, extend it to your right, use this gap to take the buy after clearing this low or clearing these lows. After clearing these lows, this gap is more than enough for being profitable. So extend it to your right until here. What happened? This is the candle that has cleared that lows. Okay, that low, more importantly, that low has been cleared by that candle. After that candle, I'm interested to look for buy. When first time it will close above this gap and tap to this gap, I'll take the buy. First time it came here, did it close above it? No, 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 no. And finally here, look at this candle. It has closed above this gap. Come back again, trade this gap immediately within 5 candle. 1, 2, 3. The third number candle has given you the entry. You are going to take the entry over here. This is, my members know that. However, 1, 2. This 2 candle has validated this gap as the inverse gap. Where should be the stop loss? Below that candle plus 2 tick. Plus 2 tick, something like plus 2 handle 2 tick, something like that. Below that candle. What is gonna be your target? This buy side liquidity. Here, that buy side liquidity is gonna be your target. After what? After partial. Where is going to be your partial? 20 handle. Because 16 handle, minimum partial is 20 handle for us. Take the partial over here, put the stop loss to the break even. Are you profitable? Just because of that, are you profitable? By using this gap, go back around the morning session, listen what did I say about this gap. For the first time, it was not something like as in hindsight. I clearly told that. If you don't believe me, rewatch that part. However, thank you so much, guys. I hope that you got something from here. If you didn't get, I'm so sorry for wasting your time, but I believe that if you watch it, maybe it's gonna be a bit difficult or like complicated to understand at the beginning. Maybe, I'm not sure, because I tried my level best to make it very simple. But if still it is something very, what's I mean, kind of complicated to you, please rewatch 1 or 2 times. You'll understand this market is not something irregular. I can't do that every day, just because of 2 reasons. First, I don't have extra monitor. I'm just watching whatever you are watching, so it's not possible for me to keep all the things in my mind and do the streaming. It's not possible for me. That's why I'm waiting for my setup actually. See this buy side liquidity, a beautiful buy side liquidity. It's gonna be the target for the what to say, I mean the uh, after the opening. This buy side liquidity is gonna be so beautiful target if it didn't leave the sell side liquidity. It has also left the sell side liquidity here. So tomorrow is gonna be the same kind of scenario. So I would love to prefer the market will fall first, then it will go for that buy side liquidity, something like that, because it left the sell side liquidity over here. Below the sell side liquidity, there is the last fair value gap. However, if you have more multiple monitor, the thing I showed you here by breaking the leg one by another, weekly, daily, forever, like step by step, come to this 1 minute chart and look for the precision. It's a so precise market, very precise market. Still, this is December and market is giving this type of price action. Now think what is going to happen if it is the February. What we are going to do, man. However, brother, thank you so much. We'll see you tomorrow. Until then, cheers, guys. Please don't forget to push the like button and subscribe to our channel if you are new. I'm hanging on 11,491 subscriber. So I just need 9 more subscriber to make it 11,500. So guys, please help me by pushing the button, commenting more, sharing the video. Thank you so much, guys.